Welcome to this explainer. Today, we are decoding the absolute jaw-dropping scale of Reliance Industries by diving straight into their Q1 2026 financial report. We're going to strip away all that complex accounting jargon and look at the actual engines driving one of the largest companies on planet Earth. Now, you might be looking at this official filing document and thinking, well, that looks incredibly dry. And fair enough, but it literally holds the keys to an absolute economic powerhouse. Sent to the BSE and National Stock Exchange of India, this standard corporate letterhead actually masks a multi-trillion rupee story of industrial dominance, retail expansion, and a total digital revolution. To keep us from getting lost in a 50-page wall of numbers, here is our roadmap for today. 1. The Reliance Empire. 2. Top-line financial performance. 3. Segment breakdown of the core. 4. Segment breakdown of retail and digital. And 5. Overall financial health. Okay, let's jump right into Section 1, the Reliance Empire and Scale Contextualization. This right here brilliantly illustrates the scale we're dealing with. It's just a single page from the independent auditor's review report, and it reads like a giant corporate phone book spanning everything from aerospace and robotics companies to media trusts and chemical logistics. That massive wall of text represents exactly 249 reviewed subsidiaries. Together, these entities generated over 3.2 trillion rupees in revenue just for the quarter ending June 30, 2026. And get this, that's just the reviewed ones. The auditors noted there are another 68 unreviewed subsidiaries, plus dozens of joint ventures. It's like a giant puzzle, and the complexity is simply staggering. You might not recognize every corporate entity name buried in that auditor's list. I mean, Dronagiri Navgar North Infra Limited doesn't exactly roll off the tongue, but this empire rolls up some massive household names. We're talking global toy giant Hamleys, broadcasting heavyweights like Network 18, huge cable operators like Hathway and Den Networks, and of course, the absolute crown jewel of their tech ambitions, Geo Platforms. They all roll up into the parent company numbers we're about to analyze. Right, moving on to Section 2, top-line financial performance, focusing on those macro numbers. So, the crucial takeaway here is that raw top-line output. For the quarter ended June 30, 2026, Reliance reported an outsized value of sales sitting at over 3.4 trillion rupees, or 340,257 crore rupees. And after stripping out all the heavy expenses required to run an operation of this size, they still walked away with a very healthy profit after tax of 20,616 crore rupees. Remember, that's just for a single 3-month period. But hey, a huge number on its own doesn't tell us much without a little context, right? When we compare this Q1 to the exact same quarter last year, you can clearly see a massive leap in sales. They jumped from 273,252 crore rupees up to that 340,257 crore rupee mark. That is incredibly robust growth, proving that this giant conglomerate isn't just maintaining its size, it is still expanding rapidly. Let's open up the hood. Section 3, Segment Breakdown, looking at the core engines. Looking at this breakdown of gross value of sales, the sheer volume dominance still heavily belongs to the oil to chemicals, or O2C, segment. It brought in a towering 201,803 crore rupees, representing the vast majority of their sales revenue. Retail is the next biggest slice at over 90,000 crores, followed by digital services at almost 47,000 crores, and finally, the oil and gas segment bringing up the rear at about 6,300 crores. But as we know, revenue is great, but profit is what actually matters. Looking at the EBITDA, which is basically their operating profit, O2C is an absolute cash machine, landing at over 17,000 crores for the quarter. Meanwhile, the much smaller oil and gas segment still kicks in a really solid 4,973 crores in profit. These are the historical, heavy industry engines reliably churning out the cash that funds the whole shebang. Next up, Section 4, Segment Breakdown for Retail and Digital. Let's see how the newer consumer-facing pillars are doing. While retail brings in very solid earnings of 6,309 crore rupees in EBITDA, just look at the absolute explosion of profit coming from digital services. This segment, heavily featuring Geo, generated an astounding 21,255 crore rupees in operating profit for the quarter. This right here is a fascinating mini-narrative hidden in the numbers. Remember how the O2C segment brought in over 200,000 crores in revenue, but yielded about 17,000 crores in profit? Well, look at digital services. They operate with incredibly high margins, delivering over 21,000 crores in profit on just 46,900 crores in revenue. So O2C brings in the most total cash flowing through the door, but digital services is literally the most efficient and profitable engine per rupee earned. It is a highly optimized, high-margin game changer. So, with all this cash flying around, let's look at Section 5, Overall Financial Health, where we check the ratios. To really gauge their true corporate health, we use a fundamental accounting metric, the debt-equity ratio. Basically, this tells us how much the company is relying on borrowed money, or debt, versus its own funds to finance its massive, sprawling operations. A very high number means high risk, while a lower number suggests real financial stability. Translating that to Reliance, we are seeing incredibly reassuring numbers here. A steady debt-equity ratio of 0.40 means they rely way more on their own equity than on debt. Plus, a current ratio of 0.94 shows a highly disciplined, tightly managed balance sheet. So despite the sprawling scale of 249 subsidiaries and trillions of rupees in revenue, they are running a remarkably conservative and secure ship. So, having decoded this 50-page financial behemoth together, we've seen the vast volume of legacy O2C, the steady footprint of retail, and the crazy high-margin profitability of their digital services. Here is a question for you to chew on. Which of these immense economic engines do you think will ultimately dominate Reliance's growth narrative going into next year? Thanks so much for joining me for this explainer, and I'll catch you in the next one.